This is Tokenomist. So I'm going to talk to you today about the tokenomics of Polygon Matic. So we're going to jump onto the screen. We're going to have a quick look at what I can see, and this is just a test video, really. Just get it out there, get it on my YouTube. My background is I'm a former stockbroker, former controlled function, financial regulations qualified, securities qualified. So my background was working in small cap, micro cap stocks, finding growth opportunities for investment portfolios, blue chip stocks as well, management, those kind of things. Really getting an understanding of the kind of things that have what we call an asymmetrical upside. So an asymmetrical upside is something that is imbalanced. Okay, so let's just say you have £1,000. Okay, you go, right, I'm going to prepare to invest £1,000 into project A. It's really speculative, so it's really risky. It may not come off, but if it does pull off, the upside is phenomenal. The downside is I lose my £1,000. The upside is it could be 10x, 20x, and it's the VC approach. So the venture capital approach is they will have a basket of 10, 15, 20 companies that they invest in. They expect 10 of them to go, or 15 of them to go up the wall, one of them to get their money back, one of them to get 3x, and one of them to be 100x. And it's by spreading their risk. They know most of them are going to fail, but one or two of them are going to have a exponential curve up, and they're going to make all of their money back and then some. So that's really the approach that you need to sort of have in mind if you're looking to do anything in the any of the microcap or any small startup aggressive growth business. I have an interest at the moment in tokenized business ventures, or cryptocurrency, crypto assets, not currencies per se. And I thought, as a bit of an exercise, I wonder if I can apply the same fundamental future earnings considerations to some of these projects. Now, not all of them are. I think an awful lot of them don't need to be tokenized. I think a lot of them just are tokenized for the sake of it. Let's be brutally honest, if you've worked hard to save up some money, you don't really care about the ability to have governance tokens, unless those governance tokens allow you to then go, I want to be paid for my governance tokens. So that's a different kettle of fish. But an awful lot of them don't have any underlying pre-planned revenue stream. They're not the bad projects. They're great projects. They're really good contributions to humanity and to society, or to the Web 3.0. But from an investment perspective, probably don't have a need for you to be putting money into them. There's one that I've made a mistake on. I FOMO'd in, and it's only recently I thought, well, hang on, actually, let's not just buy into these things as a bit of a laugh. I tend to take a basket approach. So if I have an amount of money to invest, rather than guess that I'm going to be right, one in one, I will just go, right, I'll work out what the valuations of all of them are, and I'll work out like an indexing strategy. So if out of those 10 companies or projects, one of them has a market cap of half the value of all the other ones, well, they'll get half the money. And it's the same way that a FTSE 100 or an S&P 500 tracker fund works. It just equal weights based on the size of those companies. And I take the same approach. So I've got some things that I don't think are worth holding, but that's what I'm doing this for now. So this is an exercise for me, but it's also an exercise that you might find useful. I don't talk about trading in terms of a technical analysis. Don't care. Couldn't care less. If I look at a business and say, I believe that business's shares have the potential to be worth £10 per share, $10 per share in 5 to 10 years' time, and they're currently at 80p or 80 cents a share, I will look at that and go, 80 cents is a really good price to get access to a potential $10 a share project in the future. So that's how I look at it. Okay, is there an asymmetrical upside? I can use my ATP, I can make $10. So that on $9.20. That's what I'm looking for. If it goes down to 40 cents, okay, maybe I'll buy more because I've got conviction, because I've done my analysis, and it's not going to change. The price in the meantime won't change my conviction and my focus on that high goal. Now, if the price has changed because of something substantially material relevant to this particular project, that's a different kettle of fish. But I will no doubt talk about things in the duration of these videos, and someone will go, oh, it's gone down 50%, you can't be that clever, can you? It's like, well, come back to me in 10 years, which I'm sure you won't. But that's trading, and if you need money now, then get a job, don't trade. To be pretty honest, most people lose money with trading. Most people make money with long-term strategies for investments. Well, statistically speaking, anyway. So that's the general kind of thesis of what I'm looking at. I'm looking at whether or not, if the market turns against me, if I buy something for £1 or $1 or $2 or $100, and I have to hang on to it, is it worth hanging on to it? That's basically what I'm looking at here. So that's what I want to look at. I want to look at the cryptomentals, or the fundamentals of token projects. So in this one, I'm going to look at the fundamentals, or the tokenomics of Polygon. It's end of May 2021, and I have noticed very recently, and I hold Polygon Matic, so full disclosure there. But I've noticed that the fees it's generated very recently have been incredibly small. In fact, my local corner shop has probably done more fees than Polygon has done in the last week for the millions of transactions they've done. However, that may change. That's what we're going to look at, and I'm going to show you what I will look at. Now, there are many different ways to fundamentally analyze a future revenue streams, discounted cash flow models. I'm going to show you a very, very basic sort of a Pareto principle, 80-20 approach that you may want to consider. And if what you're looking at doesn't have the potential to do this or follow this plan, then you've got to ask yourself is, are you just buying an ornament or are you buying an investment? Because I think in the future we're going to see a lot of these, we're going to see stocks and share companies or common stock companies tokenize their shares. So rather than you having your share with your broker, Robinhood, or with Hargreaves Lansdowne, you'll have it on a hardware wallet on your phone, hardware wallet on your phone, and you'll only submit it to the exchange when you want to sell it. Which would be pretty cool for market analysis to understand if you've taken it off the market or on the market, so we can get an understanding of people's sentiment factor, which is something that you definitely get in the crypto market. Years ago, when I used to be a broker, you would have customers or clients, who have their shares, it's called Crest, hard copy, in a drawer at home, and they felt like they were a shareholder. And I think there's always been a value in that. And then they would send them in when they want to sell them. Now, it wasn't very convenient because it was a hard copy and you'd have to process it through the Crest. But I think with tokenization of shares in the future, we probably have the potential to make that reality again in a much more modern way. So people feel like they're actually a real owner or a token holder or a shareholder, but a token holder of a project. So that's how I look at them. I look at them as a lot of these are companies that we're investing in, and that's how you look at them. So if you're going to be doing that, you need to make sure that there is a reason why you're investing. So, for example, you get big companies, the blue chips, who have dividends. So you buy a stock because it's going to give you a dividend share, and over a period of time it compounds and it sees growth that way, compound growth. Or you might buy shares in a company like Tesla, dirty word at the moment, or Baidu, or whatever, Darktrace or whatever, that you think long term is going to be generating a shed load of money, and then it could pay dividends in 20 years' time, and therefore getting it now at this price means you've got a very discounted entry into that company in the future, and that's growth companies. So that's the different approaches. Now, if none of those hold true, then you'll ask yourself why you're owning the token. You don't want it just, unless you're a pure hardcore, I want to be a part of the industry, fine. But if you're like me and you want to be putting your money to good work, then you need to be doing some basic stuff. So I'm not going to pretend that I'm going to be doing deep fundamental analysis, because there's a lot you can't do, and you've got to sort of play it by ear. A lot of people who don't know any better will tell you that you can't do fundamental analysis on cryptocurrency. Well, you can. Those people probably don't understand how to do fundamental analysis. They probably don't understand much about crypto, and they probably don't have the same mindset or thinking strategy that you do about your particular project. But let's jump in. Let's have a look at Polygon. Let's have a look at Matic, and let's have a see whether or not it's worth buying it today or any time, and what permutations have to happen in order for it to get where it would be worth holding it. So let's jump on the screen and we'll have a little gander around. It's 13.8 billion, price of $2.24. It's come up quite a lot in the last year or so, and the last 24 hours we've seen a volume of $7.3 billion, so it's pretty big volume. It's in comparison that to, say, Ethereum. Okay, it's not quite there. So, but it's a really big volume. It's a bit more than Cardano, more than Binance, more than XRP, more than Doge, more than Polkadot. Pretty big. So it's providing a good solution to a problem of scalability on the Ethereum blockchain. So how does that translate to fees and the potential earnings? So with tokenomics, what I'm looking for here is how much fees can Polygon generate enough that it returns a potential future revenue stream for coin holders, or funds the staking rewards, or funds a fee burn or a coin burn, so much that it's worth buying it now at these prices, even at these prices, because in the long run that will potentially yield a much higher figure. So not that I'm saying that I'm going to hold them now for dividends, for example, because it's not going to happen, but basically is it a viable commercial project to invest in? Or if you were buying the business, if it was the business, if you were to buy it, is there money there to be made? So certainly we can see in the last, the volume has shot up huge. There's a recent article on this, actually I did find one here. This was written in May, so this was literally about a week ago. Polygon flips Ethereum in daily transactions. So whereas Ethereum volume might be higher, the actual transactions is running up higher. So it's developing a network effect. In terms of the number of transactions that this layer 2 solution has over other layer 2 solutions like ZK roll-ups and loop ring, it's a country mile. It is Google to the Yahoo. I hate using those phrases because different businesses and everything, but it's dominating when it comes to layer 2 solutions. They've got the first move advantage. They've got the network effect. You've only got to go onto their Twitter and you can see that they're constantly announcing new sign-ups to their platform. They've got things like Aave on there. They are moving at a rate of knots. So this is, for me, was the one that stood out. I thought, okay, this is the one I'll take notice of. So it's getting the transactions. Now the key thing really is there money there? So I come across an article actually on Reddit that was quite interesting, and someone posted this up, which is how do Polygon tokenomics work? This was done a month ago. So before really the traction started to build, 21 million transactions, and they were generating about $5 to $10 transactions a day. So I jumped onto Polygon's mainnet Explorer. It tells you exactly what the market cap is, the price is, how many transactions per day. So there's 3.5 million transactions per day at the moment on Polygon, which relates to a Polygon gas fee of 268 billion that's being used. So we jump over to Polygon gas station to see what that relates to. So I just lost my train of thought now. Was it? It's 268 billion. Okay, not 600. So I wanted to see how much that equated to. So here we are. My cat's in the background. Let's put 270 billion. Okay, so let's submit that. Okay, so we're talking. So yesterday, Matic's gas fees used was $27. Now, this is a 13 billion market cap company, right? So let's get our calculator out. I think some math wizards have already nailed this one. Okay, let's just knock out 365 times. Let's call it $28, shall we? It's $10,000 a year of fees at the current structure. So if Polygon was at its finished point and it was $10,200 or $10,200 a year, there's just no tokenomics there. It's not a business. If you went onto Dragon's Den or whatever, or Shark Tank in America, and you went, I've got this business, I value it at 13 billion, I reckon, well, at the moment we're doing $10,000 revenue per year, you'd say, get out of town. But before they do that, you'd say, well, hang on, what could it become? What could it be? And this is what I want to look at. So I sort of had a backwards and forwards with a few people on this Reddit, just to really understand what people were thinking. So most people are of the assumption that actually the fees alone now to get everyone to sign up to the platform until it becomes head and shoulders above everyone else and it becomes too critical to other businesses' infrastructure that you wouldn't dare drop it and move on to another layer 2 solution. So that's probably the point for Polygon, is they want to become head and shoulders above everyone else, in so much that they dominate so much the others just don't bother, and so they kind of get left by the wayside, and Polygon gets critical mass and no one can come anywhere near it. They build a moat around themselves, and that would then allow them to potentially increase the gas fees, and it wouldn't need to be increased by much relatively for the buyer or the user of it to still be great value. So I thought I'd have a little look and go, okay, right, so we've got 10,200 per annum at current rates, okay, and that's with 3 million transactions a day. So let's put that in perspective into the way the world we do things. So when you use PayPal, so let's have a look. PayPal fees to use it is about 1.5%, 2%. Can we see here? It's obviously no fees for friends, but if it's commercial, you're looking at 2%. Around Europe, it varies. Okay, so the merchant fees they are. So certainly at least 0.5%. Okay, Amex fees to use. What's Amex? Will Amex hide it? We're talking in the the 1% plus. I know card transactions vary, depends on the rates you get from your provider. I've got a store that has a card transaction fee of about 0.27, so we're still looking at in certainly a higher percentage of the transaction value than Polygon charge. But let's just assume that of the average transaction, and they've obviously vary in different size, but let's just say they were to take 10 cents per transaction. Okay, now 10 cents per transaction when it comes to 3 million transactions per day would obviously be 300,000. So let's just say, using the existing transaction amounts they do, and they just charge 10 cents. Okay, now we all know if you go and use ETH to send anything right now, you're still paying 20, 10, 15 pounds. 10 cents is pretty good, right? So let's just go back to this calculator and we times it by 365. We've got 109 million. So 109 million now just for charging 10 cents per transaction. Still incredibly scalable in comparison to Ethereum, and that's just 109 million. Are people going to leave the platform for 10 cents? Probably not. Now, does that mean that someone who's doing a 5 cent or a 7 cent transaction is going to be able to use the network? No, but most of the average transaction values are an awful lot higher. So 109 million. Now, when it comes to working out fundamental long-term valuations of companies, one of the things we look at are what are called price to earnings ratios. We also look at price to sales ratios for growth companies. Okay, and we look at all these kind of things. So how to use price to sales. We look at price to revenue. We get an idea of where the future projected earnings can be. Now, bear in mind, Polygon is primarily an automated platform. That means it doesn't really have a great deal of additional baggage or costs to go with it. It's not like it's selling a clothes or food and they've got the cost of goods sold. It's largely, the technology is once you've got a technology created, your net profit, that means the profit after all your costs, is an awful lot higher than others. Now, they've got obviously other costs to run, to market, to expand the business, but once those businesses are already on the network and they're using it, then it's the other businesses that are growing the network for them. So the potential is, we could just say, let's just for argument's sake, we look at the fees earned 10 cents is pure profit. It's not how it would be. It's very conservative, it's very pessimistic, it's very optimistic, but let's just say that's the case. So they do 3 million transactions, 109 million is the earnings, and now we look at the valuation. Well, the valuation of the company at the moment, or the project, is 14 billion. So we're certainly about 141 price to earnings. So still pretty high. What's the price to earnings for Tesla? Tesla, kind of spell Tesla, and it's currently around about 550. Now, that's not what you'd normally want to be speculating in it, but then Amazon was also a massive price to earning ratio before it started earning properly. So the next question, I suppose, is, okay, it seems like it doesn't earn a lot of money right now, but is it worth buying right now? Is it justifying a 13 billion, 14 billion market cap? And so what we've got to do is we've got to see what the total addressable market is. So I did a bit of research. The total addressable market, so Visa does 150 million transactions per day. So we're looking at something like Polygon, which is the internet of blockchains, could be the rails that even Visa sits on. So because Visa obviously have their costs as well. They do 150 million per day. Polygon does 3 million. PayPal, actually got PayPal's details down here. They do 12.5 billion per annum. MasterCard 90 million per day. In total, credit card transactions is 368 billion per year. That was 2018. And it's the figures rising. There's an interesting article here from Inc. 500 website, immerchant.com. We've got it here. And PayPal's 12.5 billion per year. Swift does 15 million per day, but Swift is Ripple's baby, so we're going to rule that out. But let's just say, as it stands, 2021, particularly with the growth of online even more so, let's just say there's 400 billion transactions per year. Okay, that's interesting. So, and we've got 3 million at the moment. I believe we're on 3 million transactions times 365. I think we're about a billion or so, aren't we? So we're at 1 billion transactions a year at the moment for Polygon. Okay, so pretty early on in the whole scheme of things, and we're already at 0.25% of the total credit card or transactional numbers per day. So if we got at this point this soon, let's just say eventually something like Polygon, which is the rails of Internet 3.0, becomes 10% of that 400 billion and becomes 40 billion. Well, 40 billion, we then take
that 109 million into 4 billion fees per year. And that's just at 10 cents. So 4 billion fees per year, and you'd be looking at a potential market cap that would be reasonable for a company that could still grow exponentially further to be probably in the region of something like 60 billion. 40 billion market cap, if it was earning 4 billion per annum, that would be a projected forward price to earnings of about 10, which is pretty low. To give you some perspective of price to earnings for finance, for fintechs, so average PE. Banks obviously have lower P's. What have we got here? Investopedia. Okay, so we've got here what we're looking at. Mortgage is 7.1 price to earnings. The highest one's about 32, so we're looking at about 14, 15 financial services. Okay, so if you are doing let's just say it's now doing 10% of that's just credit card transactions. We're not talking about other transactions or transactions associated with in-game purchases, music purchases, and all the other things to go with it. I'm just looking at one very particular area, was credit card, PayPal transactions. Okay, that was all I'm looking at. There's far more. There's bank, there's international transfers, there's Square, there's Cash App, there's Venmo, there's Payoneer, there's transactions on websites using other gateways, debit card gateways. There's a breadth of things. Okay, there's so let's have a look. Direct debits. There's tons of stuff. So one of the things we have as well in the UK, we have things called direct debits, where you can do monthly payments that are called based on what you spend. International direct debits don't seem to be so commonplace, so that's a whole market. So we've now got 4 billion. So if we do 4 billion times, let's do 4. Sorry, there's a building next door. Whenever I do a video or recording, I always end up having someone chiseling away at the wall. So let's just go for 14. So 56. So we'd be looking at a market cap of about 56 billion. Okay, so 56 divided by the existing, which is 14. Okay, is 4? Okay, it's bang on 4. So let's times the current price, 2.2 times 4, and it's reasonable, if it continues to get this growth, to expect longer term to achieve a price of something like $8.8. When I say it's reasonable, I don't mean it's going to happen. I don't mean it's advice, go out and do it. It can happen. It's more, there is the possibility that it could get to a price like that. And some would, obviously the speculation factor now, some people will say, well, that's very conservative. I'm just doing this on the basis of fundamentals, looking at potential earnings avenues. Just as you've seen Netflix recently put the price up, music platforms put the price, Spotify's put the price up. Once you've got someone on the platform, you can start to increase the prices. 10 cents could become 11 cents. Well, if you do 10 cents to 11 cents, then all of a sudden the market cap goes up by 10%, because 1 cent on a 10 cent is an extra 10% of earnings. That's phenomenal revenue growth that platform could create. And then we're looking at, times 1.1, 9.6, is that something? 9.68. So, if you've got to hold something, and if it dropped tomorrow and it still maintained its place as being the leading layer 2 solution to Ethereum, then it's not inconceivable that you could see much higher valuations. So that is what I would look at when I come to do a very back of the envelope, back of the bar mat kind of fundamental potential future earnings valuations on a project. I couldn't care less about the chart. There's no chart was involved here. There's a lot of flaws in what I've just done here. I'm just trying to show you that there are other ways to look at whether or not something's worth doing. The key thing is it does charge fees. It can increase the fees. It makes sense that the fees are low now, that it will increase it as it grows as a project. And then I guess the next question is, what happens when Ethereum 2.0 comes out? Well, that's obviously the risk factor. And if you achieve the forward valuation that you were looking for in the nearer term, you may want to take the decision to say, do you know what, I don't want to carry that additional risk, because now the balance is off. If you buy something for $2, you buy £1,000 worth of something for $2, and it moves up to $6, and you're forecasting maybe an addition, maybe $8, $9. Well, now you've got 2/3 of that growth. So now you don't have an asymmetrical upside. You have an imbalance down. You have more downside based on what you've gained than there is upside, and you might want to make the decision then to step away. But that's another way that you can look at projects and see whether or not it's worth sticking your head in the fireplace. And I hope that's been helpful.
There you go, wardrobe change. That's really that's fundamental analysis to some degree. I mean, I see videos, people talk about the fundamentals of some of these projects, and they go, they've got a great team, and that is a fundamental factor. A great team is great, but if it's not going to earn revenue ever, it's not an investment. No one wants to go, oh, I've got a governmental DAO voucher, I can vote on the next issue, and I really care about decentralization. I do care about decentralization. But I also care about, if I work hard for my money, that it goes to good use. So when I'm gone, or when see Coinbase up now, Bitcoin's up 5%, nice. Filming on my phone. But I want to make sure that if I'm putting my money into something, it's actually going to go to good use. Or otherwise, I might as well stick it in, tracker fund, FTSE 100. But none of this I'm trying to give financial advice. The only difference between me, perhaps, and some others on there is I actually have done this. I've got the regulation slap on the wrist as well. That's why I'm no longer a stockbroker. And it's just horrendous because it's not trading, it's stockbroking, it's selling. But yeah, I look at these projects and I think, why are you putting money into them? It's not built to generate revenues. A good example, and I'm going to do a video on this, is 1inch. And I mentioned it already in the beginning of this video. Is 1inch was just set up at a hackathon to try and make make two people's life easier when they were looking for prices for swapping. Essentially, it's just a gift to society. It's a gift to people who use the network. It doesn't generate any revenue, doesn't charge any fees. All you get when you get the token is you get a governance token. Well, I don't want a governance token. I can't sell a governance token if that governance token doesn't generate or get a share of any revenue. And it's why I'm concerned by Ripple Labs, who are going to do an IPO. Why are you doing an IPO? You're a decentralized network. Oh, you're not decentralized, you're centralized. Okay. So what does shareholders get? Oh, they get a share of the revenue. So what do the token holders get? Why are you buying XRP then? And I bought XRP last cycle, 2017, tripled my money. I actually sold it very luckily at $3, which was probably, I think, the highest it ever got to. But it was a round number, and I thought it made sense. So I sold it $2.99 or $3. Sold it at that. It's never got back to that level again. And what actually made me really want to sell it and not keep it forever was someone said, we don't actually need to have the XRP tokens to use the Ripple software. Now, that may have changed, but at the time, that made me think, well, what's the point of the token? People tokenize everything, so it's really important if you're going to buy some tokens and you're doing it from an investment perspective, that you just think about some of these things. Is there a potential upside? And I hope what I've shown you here, as opposed to going, oh, invest in this, because, it's, well, that's your decision. Me, if the price goes up to sort of $4, $5, $6, I've got to look at it and go, well, I think eventually, fundamentally, it could be worth, here, but we're already here. So now I'm risking all of this for a little bit of this. Risk reward ratios, and that's really what it's all about. It's like poker, isn't it? The secret to poker is being able to come back to the table and play again, not just blowing it all in one hit. So, but that's what I wanted to show you here, is how you can use some, and there are some problems with what I've shown you. I've talked about earnings and I call them revenue. I've talked about revenue and called it earnings. They're not the same thing. Revenue obviously has to cover many things. On top of that, it wouldn't necessarily, or a business when it earns, if a business earns 100 million net profit per annum, it wouldn't pay 100 million out to its investors. It would pay a percentage of that if it was agreed as part of a dividend strategy to pay it out. The other money would be retained and it would be used for growing the business, for cash at hand, for whatever, pay rises, ESG stuff. So there are there's some holes in what I'm doing, but what I'm trying to do is giving something, some metrics, some tools to try and give some ideas behind it all, rather than just going, oh, well, the price is going up. All these charts and things are great, but they are very short term, and they can give you an indication of whether or not you can get an entry price. But ultimately, when it comes to investment, what I'm looking for is, if I think something has the potential to be worth this much, and I can get it for this price, I could probably get it for that price the next week, or that price. But I'm looking down here. These are all good prices to get access to this. And it's not guaranteed. It's not set in stone. But so there are things I'm going to talk about, and I'm sure this will, after I've done this video, someone will see it at a later date, and Polygon is $1, and they go, "You're an idiot." No, it doesn't change the fundamental, basis that I'm looking at. It doesn't change any of those things, and that's the idiot. The idiot is the one that jumps in and out because of the weather changes. So really, just to try and give you some idea of how tokenomics should work and what really you should be looking at. Yeah, that's it really. I hope you've enjoyed the first terrible video of the Tokenomist.